Hello, my name is Adrian Worstiak, and welcome to my third ThinkOrSwim video where we'll be analyzing the moving averages and the MACD, or moving average convergence divergence for two stocks. The first stock we'll be looking at is Kellogg's. Kellogg's is a multinational food manufacturing company with popular brand names including Pop-Tarts, Eggo, Cheez-Its, Rice Krispies, Special K, and Keebler. The stock has been trending upwards since about March 14th from a low of $59.54 up to a high of $67.86 more recently as of April 11th. The 52-week high for this stock is $68.57. In examining the price line as compared to the 50-day moving average in blue and the 200-day moving average in yellow, the price line is clearly crossed above both moving averages around March 30th, which is generally indicative of a buy signal. From March 30th until April 11th, the stock has increased in price. At the same time, the 50-day moving average has dipped below the 200-day moving average, which is generally indicative of a sell signal. At April 11th, the 50-day moving average appears to be crossing above the 200-day moving average, which is a potential buy signal. Moving on to the MACD below, around March 24th, the MACD line in blue crossed over the signal line in yellow. This is indicative of a buy signal, and from that point onwards, the stock price has gone up. And looking more recently at April 11th, the MACD does not appear to be trending downward towards the signal line, which could indicate that the stock price will continue to go up. I wanted to better understand Kellogg's current position and expectations from investors to better inform a recommendation given the moving average trends. First, Kellogg is a food company operating in a time of very high inflation. In an article from CNBC from February 10th, 2022, the CEO of Kellogg indicated that the company may raise prices again in 2022 to offset input costs. Given that products like cereal and breakfast foods are staples among American consumers, it's not likely that price increases will have an impact on consumer demand more broadly. In examining the stock report from April 2nd, 2022 from the CFRA, they recommend to sell Kellogg. Kellogg has been plagued with labor disputes from domestic workers striking at major plants throughout the country. Given the rising inflation, profitability will likely be reduced in 2022. On the bright side, Kellogg's is showing great promise in sales in the snack business and emerging markets. Given that the stock price is at a near 52-week high and the 50-day moving average line dipped below the 200-day moving average line, I would advise to watch the trend. It is likely the stock price will drop. As a result, I would recommend selling in the short term. For the long term, despite rising prices, Kellogg's products are considered staple consumer goods throughout the world. Given their growth trends in emerging markets, I'd advise holding for the long term. Next, we're going to look at Mastercard. So Mastercard is a financial services and global payments business. On April 6th, the stock price line crossed beneath both the 50-day moving average and 200-day moving average, both denoted in blue and yellow, which is indicative of a sell signal. Further, the 50-day moving average line brushed up against the 200-day moving average line around April 1st, with the more recent trend being that the 50-day moving average looks to be trending downward towards the 200-day moving average. If the 50-day moving average moves beneath the 200-day, it could also point to a sell signal. In examining the MACD, it appears that as of April 11th, the MACD line in blue is crossing beneath the signal line in yellow, which could be indicative of a sell signal. To better understand Mastercard, I examined analyst recommendations for the stock. Mastercard is not a very complex business to understand. They help to facilitate processing transactions. The more transactions and money exchanged, the more fees Mastercard can earn. The consensus among analysts is that Mastercard is a buy stock for the long term, primarily because of a growing trend away from analog cash and check payments to digital transactions. It'll lead to significant revenue growth for Mastercard, especially with Mastercard's investment in contactless payments and cryptocurrency. Given the consensus among analysts and the expected growth in digital currencies, I'd advise Mastercard as a buy for the long term. However, given the recent trend of the price line moving below the 50-day and 200-day moving average, as well as the MACD line appearing to begin to cross below the signal line, I'd say it's likely that the stock price in the short term will continue to drop. I would advise selling for the short term.